Lam Research has certainly been on quite the hot streak in the last couple of years, but is that run going to continue? Lam fits into the wafer fab equipment portion of the semiconductor industry in the blue bubble there. And let's talk a little bit more about the supply chain, using our new supply chain tool that is really close to being out in the wild.
On the left, a little bit of our supply chain work. But what you're looking at there in the top left are some of the specific process steps, broad-based process steps Lam Research participates in. They are one of the leaders in etch and clean, and also, generally speaking, number two behind applied materials in deposition, including ALD, atomic level deposition. On the bottom left, there are some of the dependencies, some of the part suppliers and fabricators that Lam Research uses to assemble their equipment. And on the right, their customers, especially the memory IDMs, as well as TSMC. One of those new pieces of equipment, Akara, including not just for advanced memory, but also advanced logic. Pretty fascinating there, the bubble on the left. Kasey, historically, Lam does a lot of equipment sales, the memory chip makers, but Foundry, 60% of sales in this latest quarter. Who is that? Who's gobbling up that equipment?
Like you just said, TSMC.
TSMC. Probably also a little bit of Samsung. They actually, in Lam's latest annual report, called out Samsung, so probably Samsung Foundry specifically fits into that bubble. China sales at 43%. I mean, this is the big ongoing concern. And this was addressed right off the bat in Lam's earnings call earlier this evening. Little note, footnote, but it's an important note in Lam's annual report where they say that revenue by geography is recognized not by where the company is headquartered, but where the actual fab is located. So it could be like an SK Hynix fab that's in China. Obviously, SK Hynix is in South Korea, or Samsung in South Korea. If they buy equipment for one of their fabs in mainland China, Lam actually reports that revenue geographically as a China customer, even though it's not really actually a China customer.
You're going to see a couple of charts from the sponsor of today's video, Fiscal.ai. We use Fiscal almost every day here at ChipStock Investor.
Fiscal's tools for figuring out a company's valuation run the gamut, everything from calculating different per share profit metrics like GAAP earnings per share, or our preferred metric here at CSI, free cash flow per share, conveniently calculated there, and then integrates well with Fiscal's other tools to help you forecast out what a company might be able to generate in the coming years, which in turn helps you decide whether you think a business is a good buy right now or not.
You can get 15% off any paid plan, including enterprise plans, with the link here on the screen and in the description, fiscal.ai/CSI.
One issue that Lam was going to continue to have is this right here.
This is from the US BIS, Bureau of Industry and Security. So they expanded restrictions in September. We already knew about this. We talked about this in applied materials as well. There is yet another impact to these companies' revenue because of this expansion of not just the company entity list, companies in China that Lam and Applied and the other fab equipment suppliers can't sell to, but a lot of these entity list companies have a loophole that they've found in recent years is taking these equity stakes in smaller businesses and purchasing the fab equipment through those subsidiaries or those equity partners or an affiliate of some sort. So that's this affiliate list. This is what Lam is referring to. CEO Tim Archer said on the call that the December guidance, which we'll talk about momentarily, does include a $200 million revenue impact from that 50% affiliate rule announced by BIS last month, almost a month ago, and about a $600 million revenue impact for calendar year 2026. But the good news is, outside of China, the semiconductor industry is going to mop up that demand one way or another. If it's a fab in China not producing the chips, then someone else will do it. And so Lam does expect overall that the restrictions to selling to China will be more than offset by everywhere else. US, Taiwan, Korea, Japan, so on and so forth. So that's the good news.
And also because of rising NAND demand. We focus a lot on HBM, of course, for AI accelerators, but NAND, which if you haven't caught our SanDisk video, make sure you go check that out because SanDisk is a big player in NAND, along with their partnership with joint venture, I should say, with Kioxia. But they expect 40 billion in wafer fab equipment over the next several years, a lot of that being NAND memory.
Also the Pure Storage update as well, which we bought more of right after their last earnings report a month or two ago. It looks like AI data centers are going to begin switching over to more SSDs, solid state drives, versus the old tried and true hard disk drive, HDDs. So that's great news ultimately for Lam if you back it up the supply chain, as a lot of these companies start adopting SSDs.
Right, they could capture a fair amount of that 40 billion expected spending in equipment. Here's the quarter highlights: 5.32 billion in revenue for the September 2025 quarter, and earnings per share came in at $1.26, down a little bit from last quarter.
Just a brief, quick highlight here on the revenue specifically. This is something we called out, especially in 2023 and last year, 2024. Lam was basically the only wafer fab equipment stock out of the Fab 5 that we were buying in 2025. And one of the big reasons was they have actually an outsized amount of their revenue is from customer service and customer support. A lot of these companies, especially the memory IDMs like Micron and SK Hynix, when they were still dealing with their cash crunch because HBM demand was rising, they didn't necessarily have the cash to just buy a bunch of new equipment. They wanted to repurpose some of their DRAM equipment for HBM, for example. And so Lam has a very sizable business, like a third of their business roughly, that helps shuffle equipment around the fab, outfit the fab once that equipment has been repurposed and put in place. And this is a great aspect of their business. All of the wafer fab companies have some sort of service revenue, software revenue, but Lam especially so. Very, very large amount of those sales coming from customer support. And that continues to be the case.
And this would be important too if we go back to this slide here, where at the very bottom it says clean room space constraints could limit the pace of NAND supply growth. So if you have limited space, utilizing that to the best of your ability by using maybe some of Lam's customer support could help you out.
Yeah, maybe a similar dynamic going on, like what happened with repurposing of DRAM to HBM equipment, also taking maybe some equipment that's been installed for NAND, older NAND technologies, and repurposing it for some of these higher end NAND devices that are now in need for AI data centers.
Right, here's some more of their financial results for the quarter. Just point out their operating income, 1.8 billion, and their gross margin, 0.6%, up just a little bit from that last quarter.
They've really outperformed this year. Management had actually stated 2025 that we should all expect a dip in profit margins this year as Lam has invested in a lot of new equipment and process technology for their customers. Well, they outperformed. And you also see the share count there. The very bottom line continues to get reduced as well. Quarter over quarter, a nice little reduction there in share count as they return cash to you, the shareholder, via buybacks.
Let's talk about their guidance. They expect their revenue to be 5.2 billion, plus or minus a few hundred million in the December quarter. Gross margin down to 48.5%. And on a non-GAAP basis, operating margin 33%. and those earnings per share to be about $1.15. So that all implies flat sequential revenue and slight sequential decline in earnings per share for Lam.
Okay. So overall, it was a good quarter. Here's a quarterly revenue and earnings per share chart. Culminating there in the September 2025 quarter, you can see the sequential dip in earnings, a sequential increase in revenue, quarterly revenue basically back at all-time highs again after that couple-year downturn. 2 bars over, you can see the Wall Street consensus revenue from sell-side analysts. That consensus revenue, though, as you just saw, as Kasey just showed you on the last slide, 5.2 billion is the actual estimate from Lam. So it was actually a really good outlook, even though it is implying some flattish sequential guidance and maybe a bit of a dip in earnings as the company makes some investments, ramps up manufacturing of new equipment. They are beating what is being implied currently by analysts. And so this may help when looking at the valuation, which is historically high. This is forward valuation, forward PE, and price to free cash flow. We're no longer buying Lam. We thought it was cheap in 2023, obviously, with all the other fab equipment providers. We thought it was still cheap in 2024 and through most of 2025, but then 40%-ish run up in the last couple of months. We're now saying be patient with Lam Research. We're not selling. We still have our position in Lam. It's part of our Fab 5 basket and the larger basket we have in the wafer fab equipment companies. But maybe just after the run up as of late, exercise a bit of patience. But the upshot here is, and we'll monitor this, but it does seem that maybe some of these forward valuations are implying not as good earnings growth in calendar year 2026 as Lam might actually be gearing up for. So there is that caveat, but
I think we'll get to know a lot more in Q4
mhm.
about what the projections will be for 2026.
And I suspect TSMC will probably play a large part in that outlook when we get it from Lam management here in just another few months, and it's 2026. Wow.
Yeah.
2025 has been a blast.
Make sure you hit the subscribe button, like the video, and stay tuned for those Semiconductor Insider updates and our new web app launch. We'll have it coming up soon.